decline on the day today.
Well, you are reaching. Look at that. They're
Really
flat.
perfect. Look at that.
Yeah. That's awesome.
All right, listen, it's terrible. What am I going to tell you?
Flat line.
It is. Listen, the market's down, and that's a fact.
Let's have Carabel pick it up.
Yeah. Well, before he does, take a look. Listen to our friend Bill Ackman, who actually thinks there's a lot of opportunity out here. Take a listen.
People are generally losing confidence, but I think it's one of the great opportunities I've seen in my career to make investments, and we're putting large amounts of capital to work today.
He is one of few, but he also is one who has been right. He was right on the way down. Is he right, Zach, in your opinion? You've been one of the folks really pushing for the fundamental opportunity that exists in this confidence vacuum.
You know, in general, this show and Warren Buffett exist in very different universes. But when you look at Warren Buffett's history of being able to buy stuff and going, look, I might be down 40% here, but I know what I'm talking about. And yet, for every Warren Buffett being right, there's 7 who are wrong. But, you know, unless you believe this market's going to zero, the global economy is pricing at a depression-level event, then there is selling in these markets that is out of all proportion. And we've been talking about that for a while. I mean, it would take 19 more days for the market to go zero.
At the current burn rate.
At the current burn rate.
And as I said at the break, that would be a heck of a buying opportunity.
And that would be, I think that would be the buy
I'm long at zero. The Buffett thing I take exception to only because why isn't he buying common stocks? He's not buying common stocks, but rather he's raising the cost of capital for everyone across the board with these ridiculous deals that he's signing with some of America's best companies.
I think you should have him on the show and ask him about that.
I would be happy to, actually. But I'm just saying the Oracle is getting a much better deal than I can.
Yeah.
And that's the problem in the equity market.
But you have fundamental companies that you point to that at the very least they pay a nice yield.
Right.
Pfizer you mentioned earlier.
Yeah, and again, Pfizer I mentioned earlier saying, this is a company I don't even like at a fundamental level, that the equity markets are not pricing appropriately relative to the fundamentals. I mean, today Yum reported right after the close, Yum is a company that had 10% earnings growth, forecast for the year ahead with 19% operating profits in China, which is their major growth driver, with a stock that has gone down 35% in the past, Guy probably knows how much time.
No, in about a little less than a month. It's unbelievable.
You know, that is a sign of a disconnect, and we've been saying this for a while. The selling in the equity markets is credit market driven, not the fundamental collapse of these companies. Even if you believe, as you should believe, that a recession is likely in the United States and in the European Union, the fundamentals of these companies are not dropping off.
Give me a couple more names.
I mean, we've been talking for a while about the base metal names. China's economy is not slowing, and throw a dartboard at a base metal company, whether it's Freeport or Rio or these others, and you've got a lot of growth. Another one is industrial names that are leveraged to strong areas of growth. Talked about Fluor before, also been eviscerated. Fluor the company, not Fluor on the market. The Manitowoc makes all the claims.
But let's stop on the Manitowoc or any of the even Fluor, the construction names. If the U.S. is going into a recession, let's assume, to use John Riding's alternatives, best case scenario, which is recession, which is vastly superior to depression. If we get recession, what makes you think that we will still get as meaningful a level of activity in China and in India when you consider that their economy is still largely driven by selling things to us?
Yeah, I think their economies are not largely driven by that. They may have gotten their kickstart in the 1990s by selling things to us. They're now getting their kickstart by selling things to themselves, which is largely what the American economy is. It's people buying stuff that we make, and increasingly people buying stuff that we don't make. China is becoming an economy where they're buying stuff that they're making. It is its own self-fulfilling prophecy in a positive direction. And you do not see the slowdown there. They've got $2 trillion in the central bank. India is not even porous in the same way to global capital. They are a domestic consumer market that is producing and making and buying.
You were getting here, Joe. I know this is your ball of wax here. If you look at your commodity,
I feel a little bit better about my XL Maritime position right now. No, I think there are fundamental stories out there right now that go to supply that once this capitulation process gets over, you know, you go back to that theme of standard of living, investing in things related to energy, Jeff's favorite, food, investing in natural resources, global infrastructure, because I think those plays will be there again.
All right, real quick, round the horn, other names as we're playing the name game here. What that you McDonald's?
Probably like they're hot. McDonald's, I'm still long, but in terms of the Asian growth story, that is, deader.
But I would take anything. What about you,
Well, two things. The valuation on Yum doesn't make sense here. Yum made a 52-week low. And look at Lockheed Martin. Defense spending is not going down. The stock is down 18% in a month and a half.
Joe? You got your XL Maritime. Oh, well, then now that
That
I like
was
that.
cool.
Wow.
now you know the stock market's got problems when we lose power in the studio. Go ahead here.
I'd go to biotech. I like the pharma. I like you brought up Pfizer. They got the good dividend, and they're going to be able to continue to pay because they're sitting on $26 billion in cash. If you're looking for something that has upside that's been taken out back unjustly, I like Celgene. Celgene is too cheap at 55.
Buffett's making some cuts at General Electric.
Yeah. Oh,
We're actually holding lit up for 57% of the show
The
now.
market may be bad, but it is not lights out. We are back right after this.
More trades, more deals, more fast money.
That's right, folks. We are just 19 days from zero. Set on October 7th Fast Money Show, we are just 19 days away from zero. So if you look at that at total days, that would be October 26th. Or if you just look at trading days, that would be November 3rd. Now, like the common saying from Jeff Macke, he says to buy the vultures, not the meat. And we're starting to see Bill Ackman and Warren Buffett come in and pick up some of these distressed companies. That's just like what John Rockefeller did 100 years ago by buying distressed companies. Jeff Macke said recently that that would be a heck of a buying opportunity if that were to happen. Also, Guy Adami says that this could possibly be the greatest trade in trading history. Now I'm asking you to join me, Brian Mckeon, as I go through my list of 100 top traders. It's where I simply go through the richest people in the world and their investments and filter out their picks. And that has done so well for me that in this year's CNBC stock contest, I finished in the top 1% with a return of over 48%. Now what I merely do is filter out their picks through these free websites. So let's see what we get. Now remember, all analysts' recommendations are of October 7th, 2008. Now based on Fast Money Show of October 7th, we can see that Lockheed Martin, Rio Tinto, and McDonald's are the only ones rated in the buy camp of the ones they showed in that segment. Now, onto my disclosure disclaimer time. I am not a licensed investment advisor, and the investments I am showing you today, what I currently doing for my friends and family's accounts. Also, I currently own shares of Berkshire Hathaway. So, I'm asking you to stand by. See me next time at my 100 top traders.